Tesla stock is easily the most controversial stock in the entire stock market. Some analysts think that Tesla stock is worth $17 today, whereas others believe that Tesla will be worth at least $3,000 by 2025. Elon Musk recently told his employees that if Tesla executes really well, then he agrees with ARK's price target for Tesla of up to $4,000 per share. So with all of this controversy surrounding Tesla stock, it's difficult to find the actual intrinsic value for Tesla stock. I've personally created over 130 videos on Tesla's business fundamentals, all of which cover every aspect and argument about Tesla. I will be projecting a 4K simulation model to calculate a fair value for Tesla stock today. By the end of this video, all 4 of my projected cases will be used to estimate an intrinsic value for Tesla stock. These cases will include all qualitative and quantitative attributes that will help us investors determine the real value for Tesla. The perfect case assumes that Tesla ramps up its vehicles in a perfect fashion. Giga Berlin and Giga Texas both start small-scale production in 2021 and ramp up in the following years. Tesla's production timeline also starts early, as the Tesla Roadster, Cybertruck, and Semi all start small-scale production in 2021. By 2024, the $25,000 Tesla starts production as well. Most importantly, full self-driving is solved in the perfect case scenario. By 2023, full self-driving passes human capabilities, and by 2025, Tesla gains government approval for a robotaxi network. To top it off, Tesla Insurance, Tesla Superchargers, and Tesla Energy all scale worldwide. The Tesla bot prototype is also released in 2022, but only starts production in 2026. I estimated that this scenario has a 5% chance of occurring, which will be very important soon. In the bull case, the main difference is that full self-driving passes human capabilities by 2025. As a result, Tesla never gains government approval for full autonomy. Another difference is that the Roadster and the $25,000 Tesla are delayed by 1 year compared to the perfect case. The Tesla bot prototype is also delayed by 1 year as well, and only goes into production by 2028, which will not be included in this model. My valuation model will project all of the possible scenarios for Tesla's business until 2026. I estimated that this bull case has a 25% chance of occurring. In the base case, I assumed that Giga Berlin and Giga Texas will start small-scale production in 2022. Because of this, the projection for Tesla's production timeline was also slightly delayed by 1 year. This scenario also assumes that Tesla's full self-driving software passes human capabilities by 2026. Additionally, I estimated that Tesla Insurance, Superchargers, and Energy all ramped up at a normal pace. Another difference in this scenario is that the Tesla bot prototype was estimated to be released in 2024 and only went into production after this valuation model. I gave this base case a 45% chance of happening. Lastly, the bear case is what every Tesla short seller wants. A massive battery shortage delays production for Giga Berlin and Giga Texas all the way back to 2023. This affects the production timeline as well, which is delayed by 1 year compared to the base case. Full self-driving also improves at an extremely slow pace and never passes human capabilities. Tesla Insurance, Superchargers, and Energy also garner very little traction because of a shortage in raw materials for Tesla's vehicles and batteries. Finally, the Tesla bot fails miserably in the bear case, as Tesla manages to create a prototype by 2025. I estimated that the bear case has a 25% chance of occurring. Everything we just talked about was mostly qualitative, but in order to find the intrinsic value for Tesla, actual quantities are required. In this spreadsheet, I estimated and calculated the future potential of Tesla's business in every scenario. To start with vehicle deliveries, I projected a wide range of vehicles sold in each scenario. In the bear case, Tesla's production capacity only increased to 3.1 million vehicles by 2026. This is a major difference compared to the perfect case, where Tesla delivered over 9 million vehicles by 2026. These delivery numbers are based on a range of growth rates, which range from case to case. You can see how the growth rates trend downwards over time. This was done under the assumption that it would become more difficult for Tesla to ramp up at a larger scale of production. The vehicle projections that you just saw were based on Tesla's estimated production timeline for new and existing vehicles, which I estimated within each scenario. In the perfect case, Model Y production already reached its highest percentage by 2022. From 2022 to 2024, the Cybertruck spearheaded Tesla's growth. By 2024, the $25,000 Tesla began its production ramp-up. I used a similar trajectory for the bull case, but with a slower overall production ramp-up. For example, the Cybertruck began production by 2021, but did not reach its maximum percentage until 2025. The $25,000 Tesla also had a slower ramp-up compared to the perfect case. In the base case, I assumed that an even slower ramp-up occurred than the bull case. The bear case assumes that a massive battery shortage occurred. As a result, estimated vehicle production slowed down substantially. Using the percentages that we just talked about, I calculated Tesla's average selling price per vehicle over time. Each case's trajectory varied based on how quickly Tesla's new vehicles were ramped up. The next component was full self-driving. At the beginning of this video, we went over how each case had different estimated improvement rates for FSD. These qualitative attributes were translated into an estimated percentage of vehicles sold with FSD over time. I also translated the improvements in FSD to estimate the price of FSD over time. In the perfect case, full self-driving reached full autonomy, which led the price of FSD to reach $25,000 by 2026. On the other hand, in the bear case, the price of FSD only reached $16,000 by 2026. Based on the projections that we just went over, I calculated Tesla's estimated vehicle revenue up until 2026. All of Tesla's vehicles need to be insured, which is where Tesla Insurance comes into play. Tesla plans to dominate the insurance industry with its own insurance product. Data is practically gold in the insurance world, and Tesla has the most data about its vehicles. Tesla Insurance is currently available in a limited number of states, but is quickly expanding across the US. Tesla Insurance has done quite well so far. As demonstrated in this graph, I projected the rate of expansion in Tesla Insurance by estimating the percentage of Tesla vehicles that would be insured. Then, I projected Tesla's revenue per insured car using relatively conservative numbers. These two estimates were then used to calculate the total revenue for Tesla Insurance. The next key segment for Tesla is Tesla Energy. The products in Tesla Energy include the Tesla Powerwall, Megapack, solar panels, and solar roof. The Tesla Powerwall is a battery system for homes that costs $10,500 after installation. This is a popular product for people with solar panels that want to store their energy for short periods of time. The Tesla Megapack is a larger version of the Powerwall and is primarily used by utility companies. Both of these products are reportedly sold out for quite a while. Tesla offers the cheapest solar panels in the industry and guarantees this with its price match policy. Tesla Energy is still in its early stages. As a result, my revenue projections varied a lot from case to case. In the perfect case, the annual revenue for Tesla Energy reached $40 billion in 2026. The growth of Tesla Energy ultimately depends on whether supply chains can successfully ramp up production. If there are enough batteries and raw materials, then prices in this sector will continue to fall and drive more demand. In the case of a raw material shortage, Tesla Energy would likely be put aside, as we saw Tesla do this during the Model 3 ramp-up. The next segment I included in this model is a Tesla supercharger network. Elon Musk recently stated that he wants a Tesla supercharger network to grow at the same pace as Tesla's vehicle segment. Many investors overlook superchargers as a potential revenue stream, but it's becoming clear that the network has humongous potential. By opening up Tesla superchargers to all vehicles, Elon Musk will single-handedly create a massive revenue stream. That's right, even non-Tesla vehicles will soon be able to charge at Tesla superchargers. In order to start conservative, I projected that the Tesla supercharger network would grow at a slower pace than Tesla's vehicle segment. As you can see in this graph, I estimated that the growth of the supercharger network would be correlated to vehicle growth rates because Tesla vehicles need superchargers to charge at. I then estimated the number of cars that would charge at each supercharger station per day. Using the estimations that we discussed, I projected Tesla's revenue growth for the supercharger network over the next 5 years. Even in the perfect case, the Tesla supercharger network still generated a very small amount of revenue compared to Tesla's overall revenue. Now, I had to project arguably the most controversial segment of Tesla, which is Tesla's regulatory credit revenue. Contrary to what most people think, most of Tesla's regulatory credits do not come from the US government. This segment of revenue actually comes from other automakers. Legacy Auto has struggled to keep its carbon emissions down and transition to EVs. In order to meet government requirements, many legacy automakers have signed deals with Tesla to average out their overall carbon emissions. For example, Tesla signed a deal worth up to $2 billion with Fiat Chrysler in 2019. I also included other forms of revenue for this segment, such as Tesla's profits from selling Bitcoin and Tesla service stores. The growth of regulatory credits ultimately depends on other automakers, so I went with very conservative estimates. I don't see this segment growing much unless if Bitcoin reaches $200,000 per coin, which is definitely speculative. As you can see with my estimated growth rates, I actually projected negative growth rates in this segment. This was primarily done to stay conservative with my numbers. The next portion of Tesla's revenue is much more speculative, which is the Tesla bot. As you can see in these revenue projections, I only included the Tesla bot in the perfect case scenario, and even in the perfect case, the Tesla bot still represented a small portion of revenue. The last portion of Tesla's projected revenue is very speculative, which is the Tesla Robotaxi network. I only included the Robotaxi network in the perfect case scenario. By 2026, I estimated that 10% of Tesla's new vehicles would join the Robotaxi network if full autonomy was achieved. I then estimated that each Robotaxi would make $150 of revenue per day. Using those assumptions, I calculated Tesla's estimated Robotaxi network revenue over time. Because this is speculative, I only included it in the perfect case. By adding up all of Tesla's revenue segments, I calculated Tesla's overall revenue over time. In the perfect case, Tesla's annual revenue reached over $600 billion in 2026. In order to find an intrinsic valuation for Tesla, I projected Tesla's future margins over the next 5 years. Through the economies of scale, improving FSD software, and better technology, Tesla's gross margin increased over time in every scenario. I estimated that Tesla's profit margins would also increase over time. In the perfect case, Tesla's profit margins increased all the way to 22%, much higher than the bear case estimate of a 12% profit margin by 2026. Using these projected profit margins, I calculated Tesla's total profit over time. Because of the power of compound interest, you can see how Tesla's estimated profit grew exponentially. Now, we have to cover the most important part of this video, which is Tesla's valuation. I estimated the trajectory of Tesla's future P/E ratio by using declining numbers. In the base case, Tesla's estimated P/E ratio decreased all the way down from 1,000 in 2020 to 32.5 by 2026. I believe that a premium valuation is reasonable, considering that Tesla has incredibly strong tailwinds over the next decade. In addition to the P/E ratio, I also determined Tesla's future price-to-sales ratio, or P/S ratio in short form. To put this into context, Apple currently has a P/S ratio of 7.5, and Apple does not have a $10,000 software product like Tesla. Using my projections for Tesla's future P/E ratio, I calculated a fair value for Tesla's market cap over time. As demonstrated in this graph, Tesla's estimated valuation did not increase by a significant amount until 2024 to 2026. This is reasonable for growing companies that are investing for the long term. After that, I used the same strategy for Tesla's P/S based market cap. You can see how Tesla's valuation started a lot higher. This is because Tesla is investing most of its earnings for future sales growth. By taking the average of these two estimations for Tesla's market cap, I calculated Tesla's final estimated market capitalization over time. Subsequently, I translated Tesla's market cap to Tesla's estimated stock price over time. By 2026, Tesla's share price in the perfect case reached $4,847 per share. In the bear case, Tesla's share price would only be $736 by 2026. In other words, Tesla's share price is expected to stay flat in the bear case. By discounting these growth rates by 15% per year, I calculated an intrinsic value for Tesla stock. In the base case, I calculated that Tesla's intrinsic value today is $743 per share. This means that in the base case, Tesla stock is trading at a fair value right now. All of these estimations are useless if we don't calculate the probabilities of each scenario happening. In order to calculate an estimated intrinsic value, I use the following probability numbers for each scenario. My final price target for Tesla stock by 2026 is roughly $1,797 per share. This share price represents an estimated compounded annual growth rate in Tesla stock of 18.53% per year. After discounting this by 15%, I calculated a final intrinsic value for Tesla stock of $883.14 per share. So there you have it. That is my final intrinsic value for Tesla stock. If you're bearish on the fundamentals of Tesla's business, then the bear case intrinsic value of $313 per share might make sense to you. I think Tesla's fundamentals and leadership are strong enough to achieve the bull case scenario. In the bull case, Tesla's estimated intrinsic value is $1,400 per share. While I believe that the bull case will occur, I'm open to all possibilities. And that's why I factored multiple scenarios in my valuation model. With that being said, if you're interested in the valuation spreadsheet I use in this video, along with my main portfolio, my $25,000 portfolio, my watch list, research reports, articles, valuation models, and much more, check out my Patreon in the first link down below. By joining my Patreon, you will gain access to months of research on a variety of stocks and macroeconomic trends. If you enjoyed this video, please hit the like button and subscribe, and I'll see you in the next one.